Hey everybody. Good morning. Good morning. Good morning. We got some pessimistic people here. Don't expect to get profit closed. Man. Man, oh man. Welcome to the show, everybody. And Germany having some problems. And typically we've seen Germany and their chemical output, any big growing economy has to produce chemicals. Like we don't we just don't run, we don't do things without chemicals. And chemical production is kind of the core of a healthy industrial base. Typically, so goes Germany's chemical output, so goes the European economy. And that's kind of lasted that way since World War II, maybe before. And right now, there's some troubling signs. So, welcome, my savvy investor trader monsters of capital appreciation. Welcome back to my morning monster show right here. If you want to chat on the stream while we're live, make sure you subscribe, click the button, and while you're at it, consider being a channel member or just clicking notifications and making sure that they're all on. Of course, YouTube will only show you stuff if they think you're going to watch it, but that's our AI overlords at work there. So the other day, I was watching a guy try to save 5 cents by arguing with a parking attendant for 10 minutes, allegorically. And, he ended up with a $50 ticket. So, yeah, argue for 5 cents and, get a big bill. It was kind of spectacular, awe-inspiring display of somebody winning a battle but losing the war in the dumbest way possible. And here I am, sipping my monster, thinking, that's kind of Germany right now. Because what's happening in Europe's industrial heartland isn't just a recession or a downturn. It's kind of a masterclass in economic self-emulation. And for those that are paying attention, it's also a flashing neon sign pointing to some of the biggest investment opportunities potentially over the next decade. These are long story kind of investment plays. These are not going to play out short. See, for decades, smart investors have had a little secret, a canary in the global economic coal mine, if you will. We're not talking about gold. We're not talking about bond yields. We're talking about the German chemical industrial output right here. These guys make basic stuff for everything. Like this, the basic ingredients for car parts, the basic ingredients for construction materials, plastics, phones, you name it, the chemicals, the chips. I mean, these are baseline ingredients for all the bigger stuff. When they slow down, when their production hits the brakes, it means that everything else is about to hit the brakes also. So back in the year 2000, before the dot-com bubble popped and vaporized trillions of dollars of people's 401ks, Germany's chemical output dropped 6% before the bubble popped. In the 1990s, same story. They dipped. 6 months later, chaos in the markets. The whole German economy faced, I don't know, I mean, maybe you just say it face planted, taking 1.5 million jobs with it. Their chemical sector is the kind of a Nostradamus of industrial economy. And what is the great Nostradamus predicting right now? Absolute apocalypse. Full-blown industrial collapse in Germany right now. Since 2018, German industrial output is down a staggering 20%. We're not just talking like 6% like we had before the dot-com bubble. And it's not just chemicals. It's the whole freaking engine of German excellence and production. Last year alone, we saw 64 billion euros in investment capital leaving the country. This year, it's on track to be over $100 billion, leaving Germany's industrial base. Companies are packing up their bags, running for the exits. And why might this be happening? Did a meteor like blow things up that we don't know about? I mean, did Godzilla emerge from the Rhine? No. This is even dumber, stupider, um, kind of a suicide mission fueled by policy. A Green Deal. So catastrophic, so divorced from reality that it's basically made it impossible to actually operate in Germany. So get this, the average cost of industrial electricity in the US, the average cost nationwide, industrial, 8 cents per kilowatt. 8 cents per kilowatt hour. In Germany, right now, because of the shuttering of nuclear power plants and rolling out the windmills, it's currently 38 cents per kilowatt hour, nearly 5 times more expensive than operating here in the US. They shut down nuclear plants, they cut off cheap Russian gas, and now they're trying to power a G7 industrial nation on windmills and good vibes. I mean, it's kind of like trying to run a Formula One car on water. And the biggest German chemical company, BASF, maybe you've heard of them, maybe you haven't. It's a perfect case study. They're closing plants in their home country, laying off workers in Germany. And where are they moving to? Where are they putting their brand new state of the art production facilities? You guessed it, China. They're literally paying to deindustrialize their own country, ship their industrial base to basically the biggest economic rival of the rest of the world. You can't make this stuff up. I mean, it's a level of strategic incompetence that is truly, deeply kind of impressive. But here's the punchline for all of us. While Germany is busy doing this, implementing this bold experiment in economic harikari, the money has to go somewhere. And it's creating some massive potential opportunities. Now, number one, the American advantage at this point. With German chemical giants hobbled, their American counterparts, it's kind of like the runway opened up, the sky parted, the sea cleared. Companies like Dow, DOW, sitting on a pretty good opportunity here if they can seize the day. They have access to cheap, abundant American shale gas. Their energy costs a fraction of their European competitors. And as German production goes offline, who do you think is going to pick up all that global market share? Where do you think it's going to go? It's a simple, beautiful arbitrage type opportunity on bad European policy. The US is set for an investment boom in this sector, chemicals, with a projected growth rate more than double that of Europe right now. So, number two, how does Europe really keep the lights on at these crazy prices? They've got to import massive amounts of liquefied natural gas, LNG. And who is the LNG king? Right here, United States, right here. Companies like Chenery, their ticker, funny enough, LNG, Lima November Gulf, are basically running a transatlantic pipeline of energy through shipping instead of pipelines. They're kind of printing money on shipping American natural gas liquefied to a continent that voluntarily blew up its own energy supply. 2/3 of all US LNG imports are heading to Europe right now. It's the ultimate create a problem, sell the solution play, and it's not going to just go away tomorrow. We're actually building more export hubs just to keep this kind of flow going. And number three, we have the Eastern Empire. We finally kind of see that BASF and other big companies leaving Germany, but the big winner of all that is China. They already account for nearly half of the world's chemical production without BASF moving in fully. And direct investment there has its own set of risks. You have to respect the trend. And as Europe fades, China comes to power. Keep an eye on companies and ETFs that potentially could give you exposure to that China industrial base. So as you watch the headlines about Germany's struggles over the coming years, don't just see a tragedy here, see opportunity. They made their choices. They've chosen climate ideology over industrial reality, and the laws of economics are pretty much undefeated as far as humans go. Follow the money, it's flowing away from the people that are paying 38 cents per kilowatt hour for power and toward the people that are drilling for it, cracking it, shipping it. Keep an eye on American Chemicals, LNG tankers, and for goodness sakes, don't try to argue your way out of a parking ticket. They can just sign it and walk away, you know? I mean, that's all for the monologue portion today. And how do we make money? What should we watch, you know, for today? All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you probably lose money. I don't have a crystal ball. I make predictions. I got my unicorn dust, sprinkle it on the market when I can, but it doesn't necessarily bring us positive results. Sometimes I get it wrong. Just a guy on YouTube, the channel. I don't profess to be the world's greatest trader. Never have. I've made a little bit of money in the market, a lot of bit of money, depending on how you look at it. But just a guy that gets lucky over and over. If you want somebody to tell you what to do with your own money, well, first off, nobody's going to take care of your money better than you. But if you need somebody to give you some guidance, there's people you can hire. Make sure you trust them. But nobody's going to do better than you taking a vested interest in your own financial well-being. Be careful out there. And it's kind of disappointing to see that 41% of you think you're not going to be green for the day. And the market hasn't even opened yet. It's not a very positive outlook on the day. So it's not a very positive outlook on your trading. You should always be optimistic. Otherwise, I kind of digress right here. There's a piece I have posted in the off topics section of Discord titled Affirmations. You can search for it in the search tool if you didn't know. Like there's a search tool that's very handy. Positive affirmations. How did I make $1 million in the market? I started with positive affirmations. I wrote down, starting in December 2019, that I was going to make $1 million in the market. And by March of 2020, that came true. Blew my freaking mind. I mean, I can't tell you why it worked or how it worked. Pretty much all the other affirmations I've written since then have almost all come true, except for the active ones I'm writing out right now. Just continues to blow my mind. So if you have a negative view on what you're going to do, your performance for the day, you bring what you want. I mean, if you have that negative view, that's what you're going to get. If you have a positive view, that's what you're going to get. Doesn't necessarily happen day to day, but over the long term, that's the way it works. Why it works beats me. Tune your own self-conscious into the outcome you want, and it can happen more often than not. Looking at the calendar today, we have some info coming out. We got the average hourly earnings. Came in at 0.1 instead of 0.3. We got core retail sales coming in at 0.4. A little hot. Non-farm employment change coming in a little positive, plus about 13,000 jobs. Retail sales month over month, flat. Unemployment rate cranking up to 4.6. That doesn't jive with what Powell was projecting. So trying to cut rates to fight the unemployment. Keeps ticking higher. We got some flash manufacturing stuff coming out here in 15 minutes or so. And tomorrow, a benign day of economic news. Thursday, though, ramping back up with CPI. Got some unemployment claims, Philly Fed manufacturing. And then Friday, we kind of wrap this up with another day of not really much, but some existing home sales. Crazy to think. Including today, there's only 11 closes left. 11 trading days right here. Got 4 this week, 4 next week, and 3 the week after. That's it. Then we're on to 2026. First trading day of 2026 on the 2nd. What's your plan? If you haven't been doing what you wanted. You need to tune yourself into a plan to bring the outcome you want. You can say it's a simulation, but think about it. Any given moment, you probably have. Think about all the external inputs coming to you, all around you. The air you breathe, the temperature, the sight, the lights, the sounds, all the pixels on the screen. You probably have millions of bits of information coming at you, but your brain can only handle like 50. It filters out 99.99% all the stimulus coming at you every moment. It does that subconsciously. So by tuning in your affirmations to things that you want, you kind of reprogram your inner self to pay attention to those 50 stimuli that might actually help you get your goals instead of filtering them out. And maybe that's why when you do affirmations, your subconscious pays attention to things that help you get those goals. I don't know. It's just kind of stuff I sit there and think about. So it's kind of wild when you think about it. Kind of wild. Anyway, it's kind of crazy. If you sit here and think that you're going to be negative for the day, it just kind of bums me out that I saw 41% thought they were going to be negative for the day. And, you're already setting yourself up to have a negative day. So it's just one of those things. I mean, our subconscious weeds out noise constantly. I mean, think about it. You got a million pixels coming at you. If you're on a 4K TV, that's 4 million pixels coming at you. That's 4 million little bits of information coming at you. 30, 60 times a second, plus the sounds and the lights and all the different things all the way around you. Millions of bits of information. But your brain filters it down, condenses it, puts the image together, distills it down, and my friend Scam Likely calling. And, it just helps you filter it out. If you have things that you want and you write them out as positive affirmations, like positive outcomes that you want to have, why it works, I've had plenty of people tell me it's hooey. But every single one I've done over any length of time has come true. So and there weren't things that were just simple and easy necessarily, like making $1 million in the market. That's not just simple and easy. And it went beyond just market outcomes too. So blows my mind a little bit that it works, but it works if you believe it and you focus on it. So anyway, how do we make money today? Moving on. Trader psychology is kind of the hardest part of this whole thing. I talk about that. Let me see if I got that up still. I've talked about it recently quite a few times. And yeah, here it is. Left it up right here. This is the hardest game in the world. You're playing with some of the sharpest, the fastest, the most intelligent, well-informed, stubbornly irrational, in many cases, unethical minds in the world. You're up against the computer that can make decisions faster than you, react faster than you, trade faster than you. The trader that has more experience than you, there's always somebody that's been trading longer than any of us. Even if you've been doing this for 50 years, there's probably somebody that's been doing it for 51. You have the hedge funds that have more money than any of us. You've got the insider that has more information than any of us. You know, they know what's going on. You have others, other traders, other people, other, posters on the, other people posting on social media that, some people just downright post bull crap, right? I mean, bullshit, just absolute misinformation. You've got the inner voice. Anytime you put your own money at risk, your inner voice trying to undo you. So if you're here trying to make a quick buck, easy money, probably not what's going to happen. The first aim here is survival. You got to figure out how to stay in the game long term if this is what you want to do. This is not like everybody says it's not a race, it's a marathon. How many marathons have you ever seen that aren't a race? There's always a winner in the marathon, right? So that's kind of stupid to say, because a marathon is a race. That's like double talk. This is like a way of life, way of using money to make more money, to compound it. You can only stay in this game by mapping the territory, understanding how all the enemies out there think and act, having a solid game plan on what you're going to do, and by picking which battles that you go into very, very carefully. If you haven't thought about it like this, you should. And if you're ready to play, let's keep going. Let's keep going here. How do we make money today? So the S&P yesterday, still grinding lower. Interesting little pop this morning. But looking at the kind of bigger picture here, we're still in this potential to drop out. Unfortunately. We're still in the range of Thursday, Friday. Yesterday was really just an inside day. Today's still being an inside day. We're still holding the 618. As long as we hold below that, a deeper flush is still in the potential cards here for us. Whether you want to believe it or not, that's kind of the price action we've got sitting here. That looks, in fact, that almost looks too perfect as a ABC with that higher push right there. This could easily result in a lower low than what we've had for the last several trading sessions here. In fact, all the way back to the beginning of December. NQ definitely looks more bearish. And it would not surprise me one bit to see this flush right down here, right to this level. That level right there corresponds with a 600 on QQQ. And funny enough, for the 19th, which is the monthly expiration, that's exactly where the gamma level sits right now. So if we have a gamma magnet, pull this down by Friday, the biggest level of market gamma sitting at 600 QQQ. This is NQ. That's the futures for NASDAQ right there. And it's going to be crazy if that just comes down there and parks. Crazy to me anyway. Now, look at this calendar. We have the VIX OPEX coming up tomorrow. Today is the last day to trade VIX for December. And then the normal monthly expiration coming up on Friday for the rest of the options. So, if you've not seen this calendar before, not everything expires the same time. Right here. So if you have those crazy AM expiring index options, the last day to trade those is Thursday at the close, but they don't expire till Friday. So be careful if you touch those. Be careful. VIX, the last day to trade today, but they don't expire till tomorrow. So it's a weird game when you play in those special options, if you will. Anyway, so we're going to see this extend on out. We'll see 2026. I mean, they're issuing 2028 equity leaps right now. Just wild. Just wild. Got to know your map. Know your map. Know your territory. Know what you're trading. Russell potentially topped out right there, hitting that 2600 that I've been talking about for months and months. If anybody played it back in, gosh, where was it? Back here in May, June, July when we broke higher. Excuse me. Let me zoom that up a little bit. May, June, July when we broke higher here. Anybody played it? We got there. Took a while. We got there. CL, here it goes. Oil about to break down. Come on, baby. I'm going to be right again. Can't believe it. Look for that to play out right there. If you wanted to try to take advantage of this, SCO, now it can last, like we could get a bounce in here and it could last longer than just a couple weeks. But we're looking for this to dip down in the low 50s, even the high 40s, bottom out. Once we do that, that's probably the final flush out in oil. At least that's my thinking right now. You know, we could come all the way down to 45, 46 area. Then I want to see a bounce up into the 100, come all the way back to 100. That's almost a double, especially if we get down in the 40s here. Be like a double on oil. Might be one of the better trades in 2026, 2027. Oil coming back up. USO is a way to play that. Or UCO, leveraged shares. It's a trade I'm watching. Gold. Sitting here right under the highs. This may spike our high up to 44.70. Right now it's just sitting here churning. The opportunity for this to come down is high, elevated. This looks like an A wave. This right here, A, B, C, looks like the B wave. That leaves continuation lower. Anywhere lower than that low satisfies that right there. These candles over here did break out 3 standard deviations away from the orange line here. And when we do that, we typically go into a period of rest. We spent like 7 days out. So it could be a significant rest because when we did that back here in April, we spent basically 5 months resting before we broke out again. This took a lot of energy out of the market. Probably spend some time finishing the consolidation here. Doesn't have to happen, but highly likely. Bitcoin, that was not a good close yesterday. Not a good close. Has me concerned. If we don't just reverse this baby now, if we go ahead and break below the low from right back here at the beginning of December, and then break back below the low from November, we're probably going to take a spill down into the, well into the 70s. 70,000s. Well into the 70,000s. Maybe down to 75,000. Right down here. And it amps up the likelihood that we are in crypto winter for the next 10 months or so. Historically, from the high, which we made like early October, to the low, is roughly a whole year. And so that would put it roughly September, October of 2026, if we're going to do crypto winter. So be careful out there, everybody. Be careful. Ethereum coming down pretty violently here, rejecting off of that. Not what I really wanted to see. This was not a 5 up. It's kind of a 3 up. More of an A, B, C. Topping out. Didn't even actually touch the roadmap line on the daily chart. If you don't have it, links in, click the channel homepage, watch the video pinned to the channel. Explains about this roadmap line. It's very simple, really. I give you the code for it. If you aren't a person that likes to deal with code, you can just click the button in the description, click the link, $5, easy button. I have training and videos and stuff. I mean, the video I have pinned to the homepage explains how it works. I've added a few little nuance to it along the way as we refine the approach, but not even touching it, not good. Not good. That's a downtrend. Downtrend intact. And continuation. I want to see it hold and turn and break back above, but the reality is sitting in that this is a downtrend. It's a downtrend on Bitcoin. We didn't even attempt to touch up here. It's a downtrend on Ethereum. NKD, I look at this as a global liquidity indicator. Still has the potential to come on down here. ABC style. Absolutely beautiful correction right there. So this will probably, if it's going to continue down, we'll probably get an initial move down, a retrace, maybe hold the 618 from the high to the low, and then push down further, make a final little bounce, stay below that, and get the finality move. That could last us out into 2026, possibly. So we could just grind lower into the new year. Be careful out there. Dollar, continuing to push lower. I mentioned once we get below 98.5, that's why it's drawn on here. We were probably going to come down to make a lower low than we made back here in September. So the target is down here in the 96 area. Now, it doesn't have to happen fast. It can grind down here well into 2026. You know, this move from here in September up here into November, where we made the high, yeah, it was like 2-3 months. So this push on back down could take a little while. This whole correction has been going since we topped out back here in 22. So it'd be nice to see this actually finish up here. And we go higher again. But maybe this downtrend is going to last. I don't know. You can say what you want to, but the price action's been kind of the truth. Apple coming down to test the uptrend of lows. If we break below it, we're probably coming on down to the 250 area. If we can hold it, the next upside is up there around 292. Amazon coming back for another test of the roadmap line. It's held it, didn't touch here, held it here, held it here, held it here, held onto it barely here, held onto it here. If we don't hold on to it here, I mean, that's a lot of testing. It can easily start dipping more severely to the downside if we don't hold on to it. We have kind of like this little downtrend of highs going here, and we back tested that right here. So that would be the first target down around 207 if we push below. And then if the rope kind of lets go, we might see something further down here in the 140, 150 area. Lower low than what we made back in April during Liberation Day. Google. Hey, Ed, make sure you come today, 5 p.m. I do requests. I don't do requests on the morning show. We just kind of keep it strictly to business. I've already pulled a list and look for opportunities here. But if you have requests, 5 p.m. Eastern time, I do a live show where that's the whole point of the show is to do requests. So Google has this potential to come back down here if we break below the 304 area. If we can hold it, that 337 is the next upside right there. Kind of, I update these every day. They don't make giant changes very often. Looking for Meta to come on down just a smidge right there at 630 area. I mean, it's possible that was it. Maybe I should add a starter position on METU. That's a leverage ticker for Meta, 2x leverage. I'm not going to add options on it because this could take a little while. This could take a long while. We could be talking about this time next year that we're almost getting to the target or something. You know, and the climb rate I have drawn on here is the kind of the average climb rate we've had for the last year or so, maybe 2 years. So this pullback continuing at the same climb rate. You could it go faster? Sure, that's always possible. But the expectation I have is just to continue doing the same kind of climb rate that we've been doing. That will put us the target up here around 1200, but it might be out in 2027 before we get there. Possibly even longer. Microsoft continues to be weak. If we break back below that low right there, the odds that we take a spill much deeper right here increase pretty dramatically. Somewhere in that 410 to 430 area. You know, 415 to 425, probably a little tighter as the more ideal spot right there. NVIDIA tested the roadmap line here, tried to go up, couldn't even get to one of the fib line resistances here. Coming back down, that's weakness. Watch out for it to dive into the roadmap line, make a lower low. And if we don't hold on to that, like if it doesn't provide support this time, you know, we just blast right through that support. Retesting the breakout back here from last year. Very real possibility. I've had people tell me there is no way it's going to do that. We'll see. Tesla cooking the breakout here, sitting there. We're actually pushing up into it, breaking out. 488, 500. That's the next upside targets right there on the smaller time frame. Just a little bounce back here. That's the targets. And bigger target on the bigger pullback from the beginning of the year through Liberation Day, 550, 600. Those are those bigger upside targets there. Looking for it to go. I have a lot of TSLL, which is leverage ticker on Tesla. Netflix, we're sitting here at that support. Went just a little lower than I thought we would, but I guess the split was more negative for the stock than I thought it was going to be. You'd be like, oh, it's not the split. It was the Warner Brothers deal and blah, 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 blah. Whatever you want to say. For weeks before the split, before there was any Warner Brothers deal announced, I said that the split was going to be negative and push us down into the 100 area, if not below. Guess what? We're below. Why? Splits, traditional splits have just been bearish for the last couple of years. And maybe it's a side effect of TradingView. If you don't have your settings set right, then a split looks like especially a split like this, it looks like all of a sudden Netflix lost 90% of its value. Dang. Stay away from that. GE Veranova. I think that was it. Let's see. Let's reload this. I don't know if that's the list today. Yeah, that's what I thought. ACN. That's a downtrend. Hold on to those lows there. Hold them below them. Potential to come on down again. Potential for this to be complete on this move, but just don't trust it at this point. Major resistance coming up here about 330. Roku. So these were gainers. They were up $2 or more in the pre-market. Put them on the gainers list. Things that were down $2 or more, put them on the decliners list. And the list is not very long today. Either way. Then we have some setups, some few things that were set up with opportunity to get in today based on my roadmap bounce. Roku has a little baby roadmap bounce with a 120 target there. Little baby. ZS continuing, golly, turning negative there. B. Riley Financial. Looks like they changed the ticker. Riley L. Maybe this is, I guess this is a Series B. And RIL1. The underlying, nice little pop. Resistance right there, though. That's a downtrend. Be careful for continuation. AMCI. It's a SPAC. Be careful. Or it looks like a SPAC. Yeah, that was some sort of SPAC deal. Hyped it up over here. Nasty over here. MSTR. Hunting. A bottom in place. But if we get any kind of continuation, 140 would be the target here. Another class of shares on Riley popping. Riley P. Riley popping. PPLT. Oh, man, look at that. Target. Next target up, 206. CPAC. That's a big crazy candle. Is that construction materials? I probably wouldn't touch it. SD Lauder. And the grind is going to continue until we can get the pop. This is working on building a base here. This was potentially the bottom. Has a big potential target. Jump up. Looking at this to rally up to like 3,000 to 5,000, but we're gonna have to break higher and get some continuation and confirmation. It's got a long, this is like a big long-term bounce here. We need to break back up through 170s, which is 70 points higher than where we are right now to really kind of start confirming that we can keep this going. But when you're looking at like 5,000, that's a long way up. So Humana, I just moved my alerts from down here. I want to know when it breaks higher. This has a potential reversal cooking here. This lowest low, move up, retrace, 3 waves. If we can break higher, this can push this up into the 440 area. SMX this keeps being horrible. I wouldn't touch it. LMT. KORU is a 3x leverage ticker. Danger. Trading 3x leverage. LMT just kind of doing this move here where we potentially made a bottom, potentially made the first move up or retrace. If we can get continuation, we'd be looking for something up in here, and then that can present the opportunity to come on up to like 656, maybe 700. UNC, retracing the roadmap line. If we can hold it, turn back higher above 350, looking for 396. Just kind of looking for opportunity here. And that one still working on the bottom. Move that over. May push a little lower. If we can reverse it, get above 350, looking for 511. CLS, probably coming back to the roadmap line. AGQ, be careful here. We have potential to come on up to 170, but this is starting to look really exponential and played out here. The correction on silver is going to be pretty vicious when we finally do it. NetEase hunting the support here. Come down, we're retesting again, move up, retrace. If we can break through at 145 area, 146 area, look for that upside right there, 163, 75% likely. If we can get the close above this line, then we will go on up here, 75% likely. BAH, still hunting the bottom. VITO, still hunting the bottom. Southern Copper, probably, I tagged the target there, so be careful. This can take a bigger retrace back down to the roadmap line. VRT, watch out for that to push lower. BABA, almost about to touch the roadmap line. Stuff set up with potential entries today. Low price stuff, I'll throw it out. CCK, went off this high, this low. Entry, target 104.20. Turn on the statistics. 51 trades, 84% profitable, 2 profit factor. So that one's not a bad one right there. Although it did not trigger the algorithm, probably because of the volatility. FELE. That's an interesting one. Here's the high. Here's the low. There's the entry, 104.50. 32 trades, 87% profitable, and a 2 profit factor. This is all the stuff I look for. Right here, check, 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 plus, check, plus, check, plus. That's a statistical population above 30. that is well above 75. Like 75 is the average, well above 75. This works out more often than it doesn't. Profit factor 2.2 is well above the average profit factor 1.2. So this one likely to work out. Average 45 days for these, but 3 standard deviations leaves you with 150. If you're trying to buy options, that's 7 months of time. 150 trading days is not 150 calendar days because the candle maker isn't open on the weekends and the holidays. So it's more like 7 months here. If you want to buy options and you don't want to run out of time, make sure you have enough time. But that still leaves you about 1% of the time you can run out of time. So be careful out there. Be careful out there. I'd probably buy shares if I was going to buy anything. And in fact, I'm going to write myself a note to take a look at that one. I've been looking at several different ones. I don't know. It's back to that whole thing that I said at the beginning. You got to pick your battles very, very carefully. Very, very carefully. I don't just jump into everything. I pick your battles very, very carefully. I like to consider myself like a retired trader, and I only come out of retirement for the best of the best stuff that I think is worth putting my money at risk. It's just a different mindset. So I'll think about that one. I don't know that I'll take that one, but I'll think about it. FELE. Throw that into my... Oop, wrong channel. I had a few others this week that I've been looking at, like OMC, SIGI, VMC, FELE. You know, CCK wasn't that bad either. Cold. Yeah, I probably wouldn't touch this one. This is a declining asset historically. This is on natural gas. Has these reverse splits in here. Just, I guess, some reverse splits, some regular splits. Just kind of dangerous right there. Play that one. NCHL. I've been looking at this one. I've been watching this one. This has a potential nested pattern for very bullish price action here. I would probably wait for just a little higher high here. 2284 sets it up for 29, and then that sets up the bigger potential for 32, 35. I wish the puts were more juicy on this one. Probably sell some puts. It has a beta 1.5, but the puts are just not that juicy on that one. SLF, last but not least. Here's the high, here's the low, there's the entry, and 63.38 targets right there. 28.64 and a negative profit factor. I probably wouldn't touch this one. Be careful out there. You can lose money when you trade. Nobody's watching out for your money more than you. Remember that. Nobody's watching out for your account more than you. I'll be back at 5 p.m. Eastern. I'll be back at 11:30 on Market Masters if you want to come hang out with Jack and I. At least I think Jack's on there today. Looking for income opportunities for the day. Talking about my 50K challenge type trades. Where I'm on the mission to turn this into a monthly profit of $50,000. It's actually running a little richer here today. You know, 7,000 year to date, up 41,000. Trying to build this into a reliable income generating account. So far, so good. Doing pretty good this year. Does your profit loss look like this? If it doesn't, you should reevaluate what you're doing. Be careful out there, everybody. Like I said, 11:30, I'll be live with Jack. Links in the description. Otherwise, hit the button. Make sure you got notifications on because 5 p.m. I'll be back right here for 30 minutes of awesome. We'll do at least 30 minutes, probably an hour of requests. I'll do a Ask Me Anything after that for channel members. Switch over about 6 o'clock probably. Have a great day, everybody. See you later. 11 trading days.